This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Pet Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. Happy Columbus Day if you are off from work and enjoying the day and taking the time to watch us. Let's try and set up the week for you because the bond market is closed. Overseas, we're taking a look to see what's going on over there, and basically you have Asia still positive, and you still have it actually as more of a tailwind versus a headwind. If you recall, you go to the chart, for the past summer or so, this summer, you had a big break in the Shanghai indices, okay, and that created a lot of volatility, a lot of headlines. After the first quarter, a very strong trend above the 8 and 21-day moving averages. You had this bear flag that continued the volatility when it broke to the downside. So the question was, what would the Shanghai do down here? It created another lower flag, but this time, it actually started to resolve to the upside, and you're seeing some more stronger gains. So right now at this point, it did hit one of these moving averages, 35. I don't think you could rule out a retest of the 200-day at some point, which is around 3,700 in the Shanghai, which is still well below 5,000. But as a trader, you have to look at it step by step. As far as Europe also has been bouncing. The HEDJ that we track, for sentiment, also put in a double bottom. That was here. That was your August 24th lows. Here is your retest engulfing day, and then you had a gap, a very strong one that did not get filled. That showed you some power, and now here you are with the HEDJ coming into big resistance in this lower end, and if it happens to clear this, this too could have a retest closer to the 200-day, which stands around 60. So in this step-by-step approach, we've been pretty much measuring the action in these lower ranges and trading them and trying to be involved in a comfortable fashion. As you could see, you have Asia bouncing back into resistance. Maybe you can go higher. Same thing for Europe, and pretty much the same thing for the S&P. The S&P last week, if you read the newspapers, had one of the biggest weeks for a while. Okay, and it all started pretty methodically. When you had this pretty big gap up to start the week. If you remember, on the negative jobs report, you had that red dog reversal right here, which also wound up being, after a successful retest of the August 24th low. So here was your bottom, here was your double bottom, here was your red dog reversal. Here it cleared the pivot for power and really never pulled back. So if you remember last week, I was like, as long as we hold above 1970, that's going to keep the momentum intact and strong. We could probably, we could get that move above, the 50-day, which was right around here, around 1998. So for now, this week, as we come in the oscillators of plus 55 and we're overbought, this is what you want to watch. You want to watch Friday's low, which is right here, which, we'll see if we could digest above or not, and that's 2007, or, hopefully we get maybe even a retest here. That wouldn't be so bad. Let these moving averages catch up, pull back a little bit for more gains. But again, just like you've seen during this, streaky move up, when you're in a pain trade, which is what this is somewhat turned into because of the fast and furious, there are guys probably still short that thought we were going to break the bottom here, okay, and might be rolling it up. So they're caught short, probably hating the world and figuring out when they can get out. And same guys that might have bought here or here, maybe they sold this day and now are in pain that they don't have enough risk on as we've been trending up. So anyway, we'll see what happens. It does seem as if we could retest this area, which is where we pretty much broke down from. You have the 200-day, you have all the moving averages above it. Remember when, this inside range broke to the downside? Well, level by level, we just cleared one pivot. You also have, remember that reflex move right here? That's about where we are. Okay, so it's step-by-step micro version. You have a few levels of interest, but you can't rule out that we don't see this. I don't know if we pull back first, which would be better, but if we don't, there's that spot. And if you go with the spiders, which a lot of you guys trade, including me, we talked about this gap up, and we want to figure out whether or not it would hold. And if gaps that don't get filled show power, well, this never got filled, and we've been grinding higher. And if you look here now, you have that 202. What is that, 202.78, okay, 202.89, and then you have the 200-day right above it. So we are coming into massive resistance between this 202.89 all the way up to 206. So the question is, do we get here first before some kind of pullback, or does the market want to retrace first? So if it's going to retrace, what does it have to do? It has to get below and stay below 258 first, and then if that's the case, then you'll see where we broke out from, on that Thursday, and then you have, bigger support coming into the moving averages. So here's your step-by-steps, move. Last week, lots of beaten down names were the ones that outperformed. We talked about the strength in oil and in some of the oil names, and they've had big moves. Some guys made some good money long. There were a few cute shorts in there. That group could probably use a rest. If you take a quick look, the XLE, I showed you the S&P. So look at the difference here. Here was your low. Okay, and then you made a nice little higher low, okay, and then you had this engulfing move right here, which was your at least your signal, or an igniting move to get out of your shorts if you were short this and maybe get long, and then it showed some power when it cleared, this resistance pivot, and now it's coming into, a bigger resistance, and then at some point, this year, who knows, maybe it can get all the way up to here, but this spot, it could use a little bit of a rest. So moving averages are below. Moving averages are above. At this point, it's not really that compelling. As far as oil, talked about that coiling, chart pattern also, where you had Goldman say $20 oil. You had all these people saying it's going to 20, it's going lower, and then meanwhile it didn't go down. So what did it do? It went up. So you started here with your igniting move. Remember this descending channel that we talked about with day 1, day 2, day 3, and then it never violated that. Well, now it's probably on its way back towards, this 17 area. So if this is any good, we want to take a step-by-step micro approach. I would say the USO needs to hold this 1540-ish area. If it were to do that, chances are if you're still long it, you could see 1673 all the way up to maybe 1742. For those of you who think that can't happen, look where oil came from. So all in all, remember the first and second quarter when everyone bought oil saying it's done going down and kind of puked it probably when it broke this inside range here, into that. Well, now let's see if it gets back up there, and maybe that means like around 55 for overall crude. So we did have a small break, or not break, but high beta tech did not lead. So the question is, what will high beta tech do this week? We still have earnings, in a week or two. But there's some decent patterns being built. You look at Google, it's not the easiest to trade, but it's got a nice upper channel, okay, where if it were to break this descending channel here, it can get back towards highs. So we'll put that on alert for this week. Here's your upper flag that digested last week. You take a closer look. If you are long Google and you bought it in the hole, I would say use 655 as your stop. And if you're looking for a trade, if it can get over this 680 or 679 with authority, there's a void here all the way back towards the highs. The question is, will it wait for earnings, or will it have a pre-earnings run? Last quarter it had a pre-earnings run, so we'll see. Amazon also been building. It was out of play last week, but it's above all the moving averages, and it's coiling. And if you want to be long, if some of you did position last week as it flagged again, this is your 520, and now here it is. If it were to clear this up 551 with authority, okay, this is one of the best bases, upper bases out there. So if the market's going to need a leader, Google and Amazon look like they could help provide that. As far as Netflix, last week there was a decent trade when it came out and said they were going to raise prices. First it looked like death, like it was going to fail, and then they caught the shorts off guard. didn't really have much follow through Friday, so at this point, I would say if you want to trade versus 112.44, that would be something to trade against. It might even shake the tree a little bit more, but I would say if it could hold 112, chances are sooner than later it's going to be taking out this high here at 115.83, and then here you are back at highs. This has earnings on Thursday, so it might be a little bit more play than Google and Amazon that don't have it this week. Apple finally woke up a little bit on Friday. Not like an earth-shattering wake up, but it did for the first time like close below a prior high, and outperform, and it's getting a little follow through today. It's above this little spot here already, so really the next level for Apple comes in near the 200-day, which is closer to 116.50. So I'm not saying it's going to get there today, but it is opening up about 80 cents. There is an upgrade. I am long overnight. First time I took Apple long in a while because it did outperform, and I already sold a portion this morning up 80, 90 cents, and then I'll see if I could hold a portion and it could work its way back to bigger resistance. Its earnings aren't for a week or two either. I'll start listing them in my note. It did hold bigger support, which was a little bit closer to 107. So here's a little bit of a void. We'll see if Apple wants to play a little catch up. Other stocks that are being built up, Facebook, it's been for 2 quarters now, it failed at the highs, and you look at the pattern here though, it's it's under accumulation, and if they have a good report, these guys will be rewarded. Here was your reversal on Thursday, perked up a little Friday. This I am long also because I know I would be buying it above 94, so I might as well buy a little bit here for a trade above there, and here's your descending channel. So I don't know if it's going to take earnings to break it out, or maybe it does a pre-earnings run, which that's what my thought is. Do these things do a pre-earnings run, or do they sit and wait? That's why you have to watch the action closely. But overall, above all the moving averages, one of the best stocks out there, and something to keep an eye on. Twitter finally woke up, gave you that nice little 2-day trade, to put it on the map with volume. Okay, that happened these 2 days, and then it held very well and worked its way up to some resistance. So there was some news that they're going to do some layoffs, but the more I read into it, the more might even be treated positively. Like they talked about how many employees and how overstuffed they are as far as dual jobs and this and that when they had no CEO. So Dorsey's saying he wants to streamline it, make it more efficient, and if that's the case and it acts well, I still think it can get up to this spot. But anyway, we'll see how it handles it. I think I'd like to see it hold 29, okay, which is right around here. And if it could hold this and go green, I think the shorts are going to get their clock cleaned. So if it goes positive today, I think that'll lend some confidence that this turnaround is for real, and you can get a faster move up to there. But we shall see. We'll see if it needs another day. We'll see if it doesn't. All I know is I am long this too, but I am long it from after hours. I left on Friday. I put some bids in at 30.06 and I think like 29.56, and I got hit as people were a little worried after hours. We'll see if the sellers come back, or if people are upset that it was the only story Friday night and people obsessed about it. So anyway, this is what is that again? That's 30.28, and then this low here is 29. So I'd say 29 would be impressive. We'll see what happens. As far as other names, the banks do have earnings coming up this week. I will go into them a little bit more in depth in my note tomorrow. Take a quick look. They've been underperforming because it seems as if rates are not going up this year. Goldman Sachs is up a little bit this morning. It's almost like you can't really buy strength, but like in my note, I was like, this is how I stated. I said, if Goldman Sachs could hold 178, there's a chance it clears this, and then bigger resistance comes in here. I'm not saying it's going back to highs, but as a trader, there's some room there if they want to bid the banks beforehand. JP Morgan also. It's not acting phenomenal. It's below the 200-day, this and that, but if JP Morgan could hold this little spot here of 61.50, there's a chance that at some point it takes this out, and again, just like a lot of things, look at how much resistance is above it, so there's not much meat on the bone, but it's something. So we'll see what happens with those earnings. I'll go into more into that tomorrow. As far as other names, Tesla's been battered and bruised. People like, what could you have seen, Red Dog, to get out of the way? Well, look at this outside day right here. That was an engulfing gross bar. That could have been get out of Dodge, or on this 2-day move, that doesn't look like anything here. So anyway, so now here it is, the low. it did break below most moving averages, and I don't know, maybe it could bounce if it wants to, so see what happens here. If you went long Friday because it was the first day, it didn't go down, use 218 as your stop, and I wouldn't expect too much, but if if you're just thinking short in the brain, look where it came from, so maybe there is some room back to 235-ish. MBLY acted better, than Tesla. For a while they were trading together. This one, did hold that spot that we were talking about, that 41, okay, and then did give you a quick feisty move, and now it's flagging. So I'm going to watch it and see if there's another trade here. If we can get above 50, maybe you get a few, shekels or a few points up to about 52. So I'd watch this as a nice tight setup here. In Biotech has been a little bit more of a problem. Was out of play last week, a little weaker. So some think that the bear is going to return here. If that's the case, maybe. You do have this lower pivot. If this were to get broken, you would think that the bears would close this below 297. Okay, below 297, back in the troubled zone, and that'll maybe raise a few fears in the market. Your lower zone is 285. If the bios get some money flows this week and oil just say relaxes and doesn't move much and gets above 311.50, then it could get back up towards 320, and that would take it a little bit away from the danger zone. Some names that acted decent in bios. You have JUNO. Had a bit of a feisty move off those lows. It's flagging here, so see if JUNO could hold this for what could be a bit of a continuation move. So if JUNO could hold, just say 45, maybe there's a move above 50. Okay, this was your nice buyable pattern right there, showing some signs of life in that stock. KITE also showed some signs of life. Came off those lows pretty fast. I don't know if there's going to be any second or third type moves afterwards. That was a problem in the market in the beginning of the year, is you'd get this fast move up, it would go sideways, people would position for it, and it would fail. So let's see if that's what happens this time. So 60-ish is support, and then if this wants to continue with time, it's got to get above 65. So both those names look okay. Let's take a quick look at the bigger ones. CELG. Yeah, CELG's got a little tight spot here. When they're tight, you want to look at them because if they do get over a level, they could move fast and lots of resistance. So in order for the, for some of these bigger bios to act well, it's got to clear this spot, which is a bit closer to 117, and then you have room to the descending channel. AMGN last week, woke up a little bit. So with a little sideways action, I guess if AMGN could hold above this 145, you will see if we can get a little quick move above this 2-day pivot, which, again, look at all the resistance above. But from here to there, that's, some decent money if you could surgically remove that. And, the metals, a lot of people, were telling me, oh, you got to put the metals back on, your morning call. And we started earlier in the week, and I think some guys made some decent money. You look at the GLD, started acting different. And when did it start acting different? Right here, really, when you had this gap up that never got filled. This gap up showed some power. And then you had these 3 choppy days, and then it's still hard. And then on Friday, it cleared this spot. You're getting some follow through now. I would say, maybe trim into this 112 versus adding into 112, considering where it came from. There are some weekly trends and some things going on here in the chart where if you just say go to the monthly chart, let's go to the weekly chart. It's real tight. There were lots of ways to navigate and be free and clear here. This was your first break, and then you had your retest back up, and then this is when it broke key support, and it's been in a descending channel ever since. So, this is here. If this is going to change for real and not be just a trade, really, actually resistance comes closer to 120, 124. So above 112-ish, which is that other 200-day, it could spur a bigger move. So at this point, if you just have short in the brain because that's been working with the metals, just be a bit careful that, if it wants to change, this is the first time it's in a position where maybe it does. And for that to happen, it's got to at least take back this 200-day with authority. And if it does, maybe it gets a quicker move like it did here, and that would take it up to about 116. So we are here in a new week. I'm not sure what type of day we're going to have with the bond market being closed and a lot of people on vacation. We know that we just had a big move. The oscillators are definitely overbought. But if you started shorting late last week because of that, who knows if you're able to hold through that. We'll see what level holds. In the spiders, if we hold above just say 200, the bears aren't going to be able to roar too loud, and that could give us 206 at some point. You know, high beta tech, which was out of play but have big bases, they seem like they could potentially break out. The question is, do they have a pre-earnings move or do they wait for earnings? You know, the banks are this week and they've been out of play and the bar is set real low there. Apple just woke up and we'll see if that gap up after Friday's action continues. And you know, these are some of the thoughts that I have, and I'm going to try and navigate them on the VTF with my radio, and from time to time I will post them on Twitter. Have a great start to the week, and I'll see you at the recap. Good luck trading today.